You might have seen me doing crazy flips like this, or you must have seen me trade an account of $100 to $3,000 in few hours, or trade $47 to $8,000 in matter of weeks. That's a result of candlesticks formation. In this video, I'm going to be breaking down how candlesticks formation truly do work. I'm going to be showing you my 3 most important candlesticks formation, and then I'm going to be telling you how to recognize it, the psychology behind it, and how to trade it. So at the end of this video, I'm going to be telling you the secret candlestick pattern no one else talk about here on YouTube, and I think you need to know that. So make sure you stick to the end. In candlestick pattern, we have 2 types: the bullish candlestick pattern and the bearish candlestick pattern. So I'm going to be unveiling the first one, which is doji. Now doji, the bullish candlestick pattern for doji is Dragonfly doji, and then Gravestone doji is the bearish candlestick pattern. Here is how you can recognize the Dragonfly doji. The Dragonfly doji doesn't have a real body and it looks like a letter T. It is usually preceded by a downtrend. You see it at the bottom of the chart. Anytime you see it at the bottom of this chart, it tells you that it's about time that the market is exhausting, the sellers are getting tired, and the price is about to start going to the upside. And the opening price, the highest price, and the closing price are same, and it has no real body at all, but a longer, lower shadow. Here's the psychology behind the Dragonfly doji. When the market opens, it doesn't have high. It just opens, and then the bears start pushing the candlesticks downwards. Then the buyers gain some momentum to start pushing the candlesticks back up, and then the time of that candlestick get to close as exact same opening time. So the closing price, the high, and then the opening price is exact same thing. So the longer the wick, the more it shows the weakness of the sellers, and then the buyers are now in the market to take hold of the market. So traders do care anytime they see a Dragonfly doji on a strong support for them to start buying, because they know that the buyer's strength is now starting to emanate from that weakness of the sellers. Here is how we trade the Dragonfly doji. First, you have to look for Dragonfly doji on a support, not necessarily at the bottom. Sometimes it's stated to be at the bottom, but then on a support. All right, so how to spot a support is price formally touched here at this point, and also touched here. So obviously anytime price come back to touch this level is already a support. So this is a Dragonfly doji, it's on a support. That's number 1. Number 2, make sure you allow a candlestick that is confirming the direction to buy. A buy candle comes up. So let's play this candle. It's a buy. Then immediately it becomes a buy, you go in for a long. So you're going to buy here, put your stop loss a little bit below the recent low, this low that you created of the Dragonfly. Put your stop loss beneath it, and then you target 1 to 2. So if your stop loss from your entry is 11 pips, target 22 pips minimum. All right, so you go ahead, you target 22 pips, which is going to give to us easily. So as the case maybe, I think this is 21, let's make it exactly 22. Then let's see how this play out. You see, it will hit us, take profit easily, take profit smashed. So this is how you actually trade with the Dragonfly doji. Gravestone doji is a bearish candlestick formation pattern. So how you get to spot it or recognize it is, number 1 is an inverted T. You find it at the top of your chart, like on a resistance, and then you have to see a preceding uptrend before you find it at the exact top. And what it simply means is anytime price gets to that top, buyers push the price a little bit up, and then the sellers came, they pushed it down, thereby making the opening lowest and the closing price as exact same level. It has no real body at all because the sellers pushed it right back at the exact opening price. Here's the psychology behind the Gravestone doji. The Gravestone doji, whenever it opens, the buyers first push the price from the opening price straight up to the highest price. Then the sellers come on, they manage and eventually able to push the price back down to the exact opening price, which also happens to be the closing price. And the longer the wick, the better the sell signal. So sellers will care more and want to sell at that point because they see that the buy strength is weakening, and then the seller strength becomes so strong because that candlestick formed on a resistance, and then most traders will want to trade on short from that point. For the Gravestone doji, you look for this Gravestone doji at the top of the chart. All right, so you must have a preceding uptrend, which is what we have, and then it has to be on a resistance. So this point is obviously a resistance point. If you have to shrink it and go far back in price, you can just do your back testing to check it. You see, it doesn't really have real body. This one have a tiny body. Sometimes that broker this can pass for a Gravestone doji, I would say. Some brokers can represent it a little bit tiny, but this is a Gravestone doji. And then the same way you trade the other one is an inverse. You wait for a bearish confirmation candle. So bearish confirmation, I have to play one more time. So this confirms that we should sell. So immediately you sell here and you put your stop loss at the recent high, a little bit above this Gravestone doji. You put your stop loss right here, and then you target 1 to 2. So 12 pips stop loss. You should be targeting 24 pips, right? 24 pips should be your take profit. So let's go ahead and play and see how well this play out. Let's see. So take profit back right there. So this is how this Gravestone doji works. The next candle pattern I'm going to be talking about is the engulfing candle. The buy candle for the engulfing is called bullish engulfing candle, and then the sell candle for the engulfing is called bearish engulfing candle. How to recognize the bullish engulfing candle? The bullish engulfing candle is always found at the bottom of the chart or on a support. It's always two forms of candle. There's a small tiny one and there's always a bigger one that engulfs it. So the small bearish candle followed by a gapped down bullish candle, and that fills up, totally engulfing the whole of this red candle. It shows that the sellers are getting weak and now the buyers are taking over by that engulfing candle that just popped up, that engulfed the last formed candle, the red candle. That's how to recognize it on your chart. Soon I'll be showing you a live example on the screen. The psychology of the bullish engulfing candle is super straightforward. The first bearish candle implies the control of the bears from the preceding or a prolonged downtrend. Then we have the big bullish candle that just come from nowhere that engulf all the activities of the bears. That shows that the bulls are not totally in control of the market, and traders do care about that. How do we trade the bullish engulfing candle? First, it is found at the bottom of the chart or on a support. So anytime you see that there is a support, you have to just look for the bullish engulfing candle. Next thing is look for a bullish engulfing candle. So first, let's create a support. First, we have price touching off this zone. This is a zone, and then you also touch off here, and then hence, anytime price ever come here it was a resistance, but when price started moving above it, then it became a support. All right. So now we have this first candle that went beneath it. This is a down. It shows that it's a downtrend. And then we have a bullish engulfing candle. This is a bull candle that took out all of this one, 2. So that shows that there's a weakness on the seller's side and there's not no strength on the buyer side. Now how you trade it is, first you have to look for the next candle that will close out above this high. The next candle must close out above this high. Once that happens, you close out above it. Once that happens, then you click on a buy immediately. So you're going to buy on this current market price and you put your stop loss below the recent low. So if you put your stop loss here, that's 11 pips, target times 2 of it, times 2 or more, at least just make sure it's times 2. So you have to target 22 pips. So 22 pips on this would mean let me distort this a bit. 22 pips would mean that price will be here, and then let's go ahead and see how far market goes. You see, take profit, just take it. That's how you trade the bullish engulfing. Bearish engulfing. The bearish engulfing is found at the top of the chart or on a resistance. You find it in a preceding uptrend. So when price gets to a resistance or an uptrend and then forms first a small bullish candle, then preceded by a candle that gaps up a bit, and then a bearish one, and it forms a bearish candle and takes out all the whole activity of the buyers, then that shows that we have a bearish engulfing right there. The psychology behind this simply means the buyers were so strongly controlling the market. That's why we see that small tiny candle right there, because it's in an uptrend. And then all of a sudden we have the sellers from nowhere coming to engulf all the activities that they have there. All right, so the next thing I want to show you now is how to have them traded. How we trade the bearish engulfing, you have to find it on a resistance or at the top of the chart on a preceding uptrend. So first you find a small candle, which is like this one that we have right now on our screen, and then the next one you're going to see a very strong bearish candle that takes out the whole body of the bullish candle that once formed. This shows that the buyers are getting weak, and then the sellers are now stepping into the market with their momentum. So the next thing is you want to wait for this the low to be taken out. So let's see when the low was taken out. All right, it didn't get taken out yet. So this took it out. All right, so hence we are going to be selling rather on this. So immediately you're going to click on the sell candle immediately when you see that this low was taken out, and then you put your stop loss on the high of this candle. So it's 11 pip again. Then you target times 2, which will make it 22 pips. So 22 pips would be somewhere around here, right? And then let's go ahead and play, and let's see how fast you take profits smashed. So this is how you trade both. This is how you trade your bearish engulfing. Next candle I'm going to be talking about is the star candle. For the buy type of candle, we have the morning star, and for the sell type of candle, we have the evening star. How to recognize the morning star? First, it is found in a preceding downtrend at the bottom of your chart or on a support. First, you see a strong bearish candle with both wicks, sometimes it might not have wick, and then next you see a bullish candle that gaps down a bit. It can have small tiny body, but then it usually forms like a doji, but no real body or the tiny type of body. Then you have a bullish candle next, which is the third one because there are 3 numbers. Then you have the third candle, which has to be bullish. The most important thing about this bullish candle is you have to take out the 50% of the body of the last bearish candle. You have to take out the 50% of the last bearish candle momentum. Now the psychology behind this is, first, it shows that there is a strong bearish momentum from the first bears that we see, for the first bearish candle that we see. Then we have a gap down, then the momentum of the bear still continues, but buyers in a way manage to take out the momentum a bit and make sure it closes as a bullish candle, but not so much bullish, but then it's bullish a bit. Then the last candle, which is very aggressive bullish, takes out the whole of the body of the last small candle, or of the bullish candle, and then also takes out at least 50% or the whole candle of the bearish candle that first formed in the whole of the pattern. So traders do care whenever they see patterns like this, because it shows that the sellers are already weakening and then the buyers are beginning to gain momentum in this instance. Here's how we trade the morning star. You have to be in a preceding downtrend, and also you find it on a support right? So here what I have on the screen is pretty straightforward. I have first, this was a resistance, and a resistance right here. So from here it turned a support because it broke and came back to become a support. So the next thing is you have to wait for a confirmation candle. Confirmation candle is the next candle that closes above or that forms equal high with this candle. All right, so the next thing, let me zoom on in so that we can see what we're talking about. Then I'm going to wait here. I'm going to go in for a buy. Exactly, this candle looks very overpriced, but then it still would work anyway. Let's just see how powerful this thing might be. So I'm going to place it here, put your stop loss on this recent low. So I'm going to be putting my stop loss on this recent low, and then target times 2. So since the stop loss is 17 pips stop, I'm going to target times 2, which is around like 40 pips thereabout, or less than 40 pips, I know, right? So I'm just gonna, let's play and see how long it took you to smash the take profit. See, take profit was even smashed even way beyond, somewhere around there, even way beyond. All right, so that's how to trade within morning star. How to recognize the evening star? Evening star is found at the top of the chart or on a resistance, and it has to be from a preceding uptrend. Anytime you see an evening star, it's always preceded by first a bullish candle, an aggressive bullish candle, then followed by a bearish candle, but not with a real body, or sometimes it can be a tiny body. And then we have the third type of candle that confirms it is a strong bearish candle. This bearish candle has to again takes out 50% of the last bullish candle body, of the last bullish candle. So it is a lot more aggressive at this time. It shows that the sellers are very aggressive in the market. Now, here's the psychology behind it. The sellers do care because the buyer strength would have already dwindled down by this initial jump of that small doji candle that you see between them. All right, that shows that the buyer's strength, the momentum is weakening, and then the seller's strength is already starting to show in the market. So you want to wait for the 50% of the body of the previous candle that was bullish to be taken out, and then that totally confirms the presence of bears in the financial market at that particular time. Let's go to the chart so I can show you how we trade it. Here's how we trade the evening star. On evening star is found at the top of the chart or on a resistance. So you see how price started touching off at this point, price touch off at this point, touch off at this other point. So anytime price come back here, you see there's a strong bullish candle followed by a bearish candle. This one, although this one doesn't have, it's not like a doji, but then notice that it is smaller than every other one that is around there. And then we have a very strong bearish candle that took out more than 50% of this bull candle. That is the most important of all of them. So it took out more than 50%. Then you wait for a confirmation candle. Confirmation candle being the next candle that will take out this low or form equal low. It has to be lower or equal. All right, so let's play, and then we are going to take our next trade. So I can even call this one, okay, maybe I can call this one the next trade, right? Or let's be very, this one did not take it out, or I can call this one to be the next, or you can even get in here, but so we can be a lot more clear. Let me use this one. I use a bigger stop loss right there, so someone doesn't think, oh, maybe it doesn't really work. So that's 21 pips. Target times 2 should be targeting, that should be 42 pips. I know this would definitely take it out conveniently. 42 pips should be somewhere around, even way farther, right? Let's go. This one you can even target more. See how well it went straight down, 42 pips. Boom. This is how you trade with the evening star tool as well. I know in this last video I promised I'm going to be showing you a secret candlestick pattern that no one talks about here, and that candlestick happened to be marubozu. Marubozu is simply a candlestick that doesn't have no wick, neither the top wick or the bottom wick. Wick simply means this candle was once this long, but now it became this point before it closed, or this candle was once this long to the downside, but it became this short before the candle actually do close up. Let me show you an example of what to do and how to trade it whenever I see a marubozu, or what I do with a marubozu. One marubozu is very important. It's a secret thing that no one ever talks about, is because it is very rare and few traders do know about it. Anytime I see a marubozu or a bullish shaving candlestick, it means that this trade is going to be an aggressive bullish candle. Or I see a bearish marubozu for sellers, it means it's going to be a very strong sales. So for example, what I have on the screen, can you see this marubozu? It doesn't at all have a wick to the downside, neither does it have a wick to the upside. So it shows that there is a strong bullish presence in the market. So let's play and see how far this market is going to go. So it's simply, if you're on a buy formally at this point, if you see a marubozu, it simply means you should double down on that on your buy trade. Keep buying more and more, because you're about to see a strong buy movement. You see what happened? These are the power of marubozu. And I hope you guys do love these lessons, because this is what I do use to trade an account, to flip an account anytime, any day, because candlesticks form most of the time more than 90% of my trading decision, whether to add more position, when to stack, when to exit, and all of that. So candlestick is really very important. So if you want to be a full-time trader, you want to be making money back to back, these lessons are very important. So you want to stick on this channel. So if you are new, you're seeing me for the first time, please kindly smash the subscribe button, and if you're a returning subscriber, please like this video so you can be referred to many other people who will be interested in trading with us. All right, let's grow this community. If you also want to be a part of our Telegram channel where I send signal, the link is in the description box. If you also want to be a part of my academy where I teach people day-to-day on how to trade, the link is also there. Be a part of the mentorship, and then we can get to learn together. So watch other videos, and then I'll see you guys around. Bye for now.